What's up, my Mind Your Money business folks? It's me yet again with another video on today's stock market news. As always, hopefully you're in the market already and not trying to time the market. There's no specific time that you can invest into the market and start making money. You have to be in the market at all time. Dollar cost average. Create a budget and invest in the market weekly, bi-weekly, monthly. Come up with a plan and budget into the market consistently, and over time you will make money. You will make a profit. So in today's news, what happened? It says the S&P 500 closes higher Tuesday, wiping out 2025 losses as Nvidia surges. So pretty much all the money that was lost over the last few months has been gained back. And this started like a week ago when we started having, gains, little gains every day. The S&P 500, doing its best in history in 1 week or over the last 7 to 8 days. I can't remember exactly. But this is what happens when you're in the market. Had you invested just a couple months ago when some of the stocks were at an all-time low, you would right now be sitting on a nice profit. So let's see what the market did today. So it says the S&P 500 rose Tuesday, clawing back into positive territory for the year, as investors extended the sharp gains seen in the previous sessions due to easing U.S.-China trade tensions. So the broad market index gained 0.72%, while the NASDAQ composite climbed 1.61%. And the Dow Jones Industrial Average lagged, losing 0.64% as a nearly 18% drop in shares of United Health pressured the benchmark. So shares of Nvidia advanced 5.6% on news that the company would send 18,000 of its top artificial intelligence chips to Saudi Arabia. Peer chip stocks rose along the AI darling, with Broadcom rising nearly 5% and AMD adding roughly 4%. So Tuesday's gain put the S&P 500 up about 0.1% for 2025, which is a good thing, right? Because they were in the negative. The S&P 500 was in the negative. So I would take that 0.1%, right? At one point, the index was down more than 17% for the year as trade tensions dented investor confidence in equities. Yeah, I was down thousands and thousands of dollars, but I didn't flinch. I'm used to investing now. I remember back in 2022, when something similar happened, I stopped investing. And I missed out on gains that happened towards the end of the year of 2022. And I told myself, don't ever let that happen again. And then plus, as you learn, the more you invest, the more you have to control your emotions. You have to understand the plan that you have to invest, ensure that you're investing into good growth stocks, or the S&P 500. That's why I have that 50, 30, 20 plan, where 50% of my investment goes into my S&P 500 ETF, which consist of the 500 largest companies in the U.S. 30% of my money goes into my information technology ETF, which also has some of the 500 largest companies in the U.S. within it, but it has about close to 300 information technology companies within it. And then 20% of my money goes into individual stocks. So I make sure that I have a diversified portfolio. Not all of my eggs are in one basket. So when the market does dip, I don't lose everything, or I don't lose too much. And then when the gains start, I make profit like I did today. So the articles are still saying, well, the news is still saying, however, Wall Street got a reprieve after the US and China agreed to a 90-day tariff pause earlier this week. The news sent stocks surging on Monday, with the Dow soaring more than 1,000 points. Coupled with a massive chip deal in Saudi Arabia, ticks down in inflation, which will pull rates closer. Which will pull rates cuts closer, and details of tax cuts. You could get a full risk on market, said Jamie Cox, managing partner at Harris Financial Group. So the White House on Tuesday announced a $600 billion investment in the U.S. $600 billion investment in the U.S. with Saudi. And that happened during the president's visit, right? What is this investment all about? So pretty much, President Trump announced at an investment forum in Riyadh, Saudi Arabia, that he will order the removal of all U.S. sanctions against Syria in order to give them a chance at greatness. So Trump's speech at the investment conference followed him signing several bilateral agreements during state visit with Saudi Crown Prince Mohammed bin Salman. Among the agreements secured is a nearly $142 billion defense sales deal providing the kingdom with state-of-the-art warfighting equipment and services from over a dozen U.S. defense firms, the White House said. That commitment is nearly double Saudi Arabia's 2025 defense budget, which totals $78 billion. The White House announcement does not say when the defense deal is expected to conclude. Wow. So bin Salman, who spoke before Trump at the investment conference, said the aim is to raise the U.S.-Saudi partnership to $1 trillion across the military, security, economy, and technological sector. Wow. Yeah, I'll just leave that there, right? Very good for them, right? So softer inflation. So adding to Tuesday's gains was softer than expected inflation data released earlier in the day. That was an important report, the Consumer Price Index. A broad measure of goods and services costs across the U.S. economy increased 2.3% year over year in April. Economists polled by Dow Jones expected inflation to remain at a 2.4% rate last month on a year-over-year basis. And just like that, the market's twin fears, a tariff-induced recession and sticky inflation, have greatly assuaged, says Chris Zaccarelli. I butchered his name. Either way, he's a chief investment officer at Northlight Asset Management. So we're still concerned that high valuation and market concentration remains risk to much higher stock prices this year. But in the short run, markets should love this data and continue yesterday's China trade celebration, which is true. The market loved the data that came from the Consumer Price Index report, and things went up. I had major gains on yesterday. Major. And major gains today, and I appreciate it. Again, when you make sacrifices and you create a plan and you're methodical about it, you study, you do your research, and you do things the right way, most oftentimes things work out in your best interest. And that's what's happening in the market. Can things take another turn? Sure. Will it get better? Sure. Will things take another downturn? Yes, sure. Will it go back up? Yes. History continues to repeat itself, right? So you're going to have your ups and your downs, and that's okay. That's good. So as always, get rid of your debt, people. Get out of debt. Get rid of your consumer debt, all consumer debt, car loan debt, credit card debt, student loan debt. Get out, personal loan, get out of debt, people. Debt is holding you back. Start selling stuff. I guarantee you there's a lot of stuff that you don't need that you can sell if you are in need of money. Start selling some of the things that you don't need, except for the kids, right? Keep the kids. But start selling things. Start downgrading. Get rid of that expensive car payment. Sell it. Get something that you can afford, or buy something for cash. Build up. Continue to save money. As you save more money, buy another car with more cash. Trade in, but start doing things with cash, and then creating a budget. And then when you become a multi-millionaire, you can buy whatever you want. You go ahead and buy that $60,000 car, $100,000 car when you're sitting on $5 million. You may not buy a $100,000 car, but if you want to splurge, if you've been, that disciplined over 20 years, yeah, buy that $100,000 car. You're in no debt. You're sitting on $5 million, and you probably have residual income that continue to come in monthly. So it's not a burden. It's not like you just have that $5 million sitting there and that's it. A lot of people will be sitting on 5, 10, or more millions, billions of dollars, but they still have income coming in each month, right? That's my plan. So yeah, get out of debt. Debt is holding you back. Debt keeps you in that slave mentality, like you can't do any better. You're not going to get out of the situation, and you feel trapped. So you stay there and you suffer. And you don't have to do that. You don't have to be that person. Also, start listening. Well, learn from those that came before you. Like, don't be the people or person that passes away or leaves your family and you don't have any life insurance, or you don't have anything to leave behind to your kids. Don't be that person. If you've been in situations where that happened to you after a loved one passed, learn from that. Life teaches us lessons on what we should and should not do, right? Don't be that 60, 70-year-old with only $1,000 in the bank, and you're working because you have to work, not because you want to work. When I'm 60 or 70 years old working, I will work because I want to, not because I have to. There's a difference. But either way, get out of debt. A disclaimer, I'm not a financial advisor, so please consult with a financial advisor before you invest any of your hard-earned money. But you need to invest. You need to start investing into assets. And you are also an asset. Start learning a new skill, learning new things. Start building yourself up so you can do more, earn more, receive more, right? Invest into stocks and real estate, land. Invest into things that are appreciating in value, not depreciating, like clothes. Clothes do not appreciate. Cars, the average car, not antique cars, right? A lot of average cars are depreciating that the average person buys. I'm talking to the average people here, not those that are multi-millionaires who are buying the expensive watches that go up in value, or jewelry, antique cars. You understand what I'm saying, right? I'm talking to the average person. Stop buying these cars, these $50,000, $60,000 cars that go down in value, these clothes that get worn and they go down in value, these trips that you would never get your money back from. People are going on trips, on vacations, and they're coming back in debt. Vacation should be planned out. You should plan the vacation, save the money so you can pay cash by putting it on your credit card to become debt. But yeah, so all right, so like, comment, subscribe, share this video. Let me know what you think, if you think anything at all. All right, you guys have a blessed day. Peace.